Hey everyone, welcome to my channel, London Business Usual. I'm your host, London, and today in this episode, I want to talk about 3 easy steps to get business funding. That's right, just 3 easy steps. You follow these 3 easy steps, you can definitely get your hands on any type of business funding from any type of financial institution, any creditor, any lender out there, from a national bank, from a regional bank, from a community bank, from a credit union. I don't care where you go, you follow these 3 simple steps, you will be on your way to business funding. Because listen up, as the CEO of your business, as the chairman of your business, as the founder of your business, as the president of your business, your number one priority is to get to the bag. How can we get capital in order to start our business, to grow our business, to scale our business? Because we definitely need funding for marketing. We might need funding for equipment. We might need funding for inventory. We might need funding for staff, for systems, right? We got all these expenses. How are we going to pay for them? We don't want to use our own cash. We work too hard to use our own personal cash. We don't want to take our savings out of our 401k, our retirement fund, our paycheck. No, we want to use that for personal expenses or keep it where it needs to be at in savings. So what we want to do is make sure, in order to effectively run a successful business, we have to have access to capital. How do we do that? Well, we have to leverage the bank's money, OPM, other people's money. So let's break that down. I'm going to give you 3 simple steps, right? 3 simple steps. Step number 1, you have to make sure you have a fundable foundation. What does that mean? Let's break it down. Let's unpack it. Well, make sure that your business is properly structured, right? There's certain things in order for you to get approved for your business loan application or your business credit application, your business has to be properly structured. This is one of the main reasons why new LLCs, new business owners get turned down. Why? Because you fall into the fraud trap. You have to understand these financial institutions, these creditors, these lenders, they get millions of applications every single day. And the first thing that they check for to make sure that the business is legitimate and make sure that the business is not a fraud business. So we want to make sure we don't fall into that fraudulent trap. How do we prevent that? Good question. Well, the way that you prevent that is to properly structure your business. So if I was to properly structure my business, for one, I want to make sure that my business name is not a high risk business name. So I give you some examples. Let's say London Real Estate Company. Bro, right off the bat, when I go apply for a loan, for real estate loan, these lenders going to know that I'm in real estate, and real estate is a high risk industry. So 2 things can happen. Number 1, they turn me down immediately because they don't want to take that risk. Because they data point shows that real estate, people who goes into real estate, especially new real estate developers, new investors, they go out of business before they even get started. So they're a high risk industry. If they go out of business, they can't get their money back, obviously. So either they're going to turn you down immediately, or number 2, you're not going to get the funds that you should be getting. You're not going to get the 25,000, the 40,000, the 50,000, right? You may get 2,000, 3,000 because you consider a high risk business. Same thing with your industry, choosing the proper industry. Now, that does not mean you can't go into real estate, or that does not mean you can't go into the trucking company, which is another high risk. Transportation is another high risk industry. Gambling, porn, right? All these are restaurants. All these are high risk industries. So you don't want that in your name, or you don't want that affiliated with your business. So, for example, your NAICS code, your NAICS code, that's the industry that you're in. Lenders check that. So when you go to a bank, when you open up a business checking account, when you're filling out that business credit application, they ask for your NAICS code. I just call it NAICS for short, right? So they ask for that to determine what industry you're in, to determine to see if they are willing to lend you any type of funding, or how much, or what the terms is going to be based on your industry risk. So we have to make sure that that's properly structured straight out the gate. That's before you start your LLC, before you get your EIN, before you get your Dun and Brad. A lot of people do that backwards. But we have to make sure those two things are right first. Then after that, we want to get our virtual office. So now you want to get your virtual office. See, here's the thing. Remember, it's all about perception. Do you look good on paper? Now, you can be working at your home. You can be working at your doghouse. You can be working at your garage. You can be working anywhere. But on paper, you want to make it seem like you're working at a big skyscraper downtown somewhere in your city. Because lenders want to make sure that you are an established business owner, that you've taken your business very seriously. So remember, it's all about perception. Do you look good on paper? So get a virtual office if you don't have a brick and mortar. Next, what we also want to make sure, do we have a professional email address? We don't want to get a Gmail. We want to get like a .com or .org. So we want to make sure we have a professional email address. Another one, we want to make sure that we have a professional website. We want to make sure that we are on all certain type of platforms, social media platform, maybe Facebook, TikTok, Google, YouTube, etc. You want to make sure you're on some type of platform. You want to have a business phone number. That's really important too. Now you can have a 1-800 number. You can also have a local number. I like to have both. So you guys should get both. If you're local, and also get a 1-800 number. Again, we want this all to make sure that our business is properly structured. Now, other videos, I'm gonna tell you exactly where to go to get, as far as the virtual office, etc. But this video, I'm just gonna keep it simple because I do have a lot of things to cover. So virtual office, business phone number, business address, business email. We also want to make sure now next we can file our LLC. We can go to our Secretary of State, or we can go to a third party and file our LLC. Properly file our LLC, meaning operating agreement, registered agent, and attach that virtual office to your LLC. All right, so properly file our LLC. That's really important too as well. After that, we can get our EIN, go to IRS, the I, the R, and a S, and get our EIN number. So we want to make sure that we do that. That's really important too. Then after that, you want to take those documents that you gathered, get your Dun & Brad. I forgot about that. Also get your Dun & Brad number that's connected to your pay debt score. But after that, we want to take our documents. Then we're going to go get a business checking account. Technically, do you know you're not in business until you get a business checking account? So when you go to banks, you say, hey, I found my LLC 3 years ago, but you never got a business checking account. They're not going to take you serious. They're not going to believe that you established business because you never started a business checking account. So make sure you do that once you have all your documents in order. Then after that, after you get your business checking account, then you're going to get listed in 411. Then you're going to get your website. So now you can get all these things, but you got the main documents. You got everything that you need in order to properly structure your business, right? Being listed in a 401 is really underrated strategy tactic that most new LLCs skip over. Lenders still do check the 401. They do check to see if you're on Google. So you're going to make sure that you be on Google, right? They still check to see if you're on social media, things of that nature. So that's really important. You have to be omnipresent when it comes to your lenders. They want to look you up to make sure, again, you're not fraudulent, that you're an established business. So properly structure your business. That's just some examples on how to properly structure your business. Right? So that's number one. Now we're going to transition to number two. Now that you have the fundable foundation, everything's look legit, everything looks good. You got a business checking account, you feeling good. You throw a merchant account in there, right? So you feeling good. Now, next thing you want to do is make sure that the business owner credit is in position, AKA your business. Your personal credit is in position. Also your business credit profile. But again, we're just talking about 3 simple steps. Number 1, fundable foundation, right? That should structure your business. Now, number 2, the business owner credit. We want to make sure that your personal credit is in position, not just your score. Everybody say, oh, I have a 700 score, I'm good to go. No, listen to me closely. Lenders and creditors understand that your credit score can be easily manipulated, which means your 700 credit score can be much different than my 700 credit score. So it's not based off the 700 credit score. It's predicated off the data that's actually reported on your credit report. So we have to make sure that our data is in position. What does that mean? Let's break that down. Well, our payment history. We have to make sure that we're paying our bills on time and over the period of time. Our credit utilization. Make sure that we know how to manage debt. Keep our credit utilization down 10% or lower. Our credit history. How long have we been managing debt, right? Has it been 2 years, 5 years, 10 years, 30 years, etc. We also have to make sure that our inquiries are low, because I don't care if you have an 850 credit score, if you have too many inquiries on your credit profile, if you have an excessive amount of inquiries on your credit report, lenders and creditors will turn you down because it makes you look frivolous, and AKA it makes you look thirsty for credit. So we have to also make sure that's in position. We have to make sure that we have high limit credit cards on our credit report, 5,000, 10,000, because if we can manage personal credit, then we can definitely manage business credit cards, which is more higher limits than personal credit. So if you got 5,000 on your personal credit, they're going to give you $15,000 to $20,000 on your business credit because they understand you have expenses in your business. So they're going to give you higher credit limits. Right. So things like that matters when it comes to your personal credit profile. The data matters, not the necessary credit score, because you can have one credit card with Capital One, $300 limit. You had it for 6 months. You have no derogatory items, right? No collection accounts, no late payments. You look up 6 months down the line, you have a 720 credit score with a $300 limit credit card. Does that mean you can go to these financial institutions, these banks, and get a $50,000, $100,000 credit card, and you only show that you can manage only $300 in credit? The answer is no, because you can't. So that's what I mean about, even though you got a 720 credit score, but the data is not there, because the person with a 680 credit score can have all the data points and still get qualified for high limit business credit cards. Does that make sense? Put in the comments if it doesn't make sense. Now, that's number 2. We want to make sure the business owner credit is in position. Number 3, which is really, really important. A lot of people look this over. You have to build a relationship with these financial institutions. I can't stress this enough. The reason why most of you guys are getting turned down, one of the reasons is because you're not building a proper relationship with these banks, with these lenders. Which means business people like to do business with people they know, like, or trust. So if these financial institutions don't know you, they don't like you, they don't trust you, how can you expect them to do business with you? So if I was to get somebody to know, like, and trust me, let's say a bank, for example, I want to make sure I get one of their products or one of their services. It's simple, which means I want to get their personal checking account. I want to get their business checking account. I want to get a merchant account with them, maybe a savings account, maybe a secure business credit card, an unsecured business credit card, a business line of credit, a personal line of credit. These are all a prepaid card. These are all products and services you can get with one of these financial institutions to get in a good grace. Now they know you. Now they like you. Now they trust you because you've proven yourself. That's like going to a stranger and asking a stranger for $100. They don't know you. They don't like you. They don't trust you. You have no record with them, no proven record that you're going to pay them back or that you did good business with them. So why would they give you? The odds are slim to none that stranger is going to give you $100. Now, if you have asked a family member, a cousin, a brother, a sister, or a family friend, or a coworker, whoever that you borrow money from, and you got a good track record with them, they know, like, and trust you, then the odds are they're going to lend you that money because the relationship is there. You build that rapport. Right? So I hope that makes sense. Those are the 3 things. Number 1, building a fundable foundation, properly structuring your business. Number 2, make sure the business owner credit is in position. And number 3, building a relationship with the right people, with the banks, with financial institutions, not other companies like Quill, Granger, Uline. That's not going to get you funding. All right, everybody. I hope that helped. That's my time, and I'll see you on the next video. Peace.